Price analysis 1xpr, Luna, avax, doge, etherol, BNB, solpr, NB, XRP, Lu, et al. Bitcoin and most major altcoins are facing selling at higher levels and buying on dips, indicating the possibility of a range formation. On-chain analysis firm Whalemap said that a reclaim of $46,500 will look like a trend reversal for Bitcoin as the previous accumulation phase of 90,000 BTC was at this level. Fidelity Digital Assets said in its annual report that the massive Bitcoin accumulation by Bitcoin miners suggests that the Bitcoin cycle is far from over. The report went on to add that more sovereign nations may acquire Bitcoin in 2022 and perhaps even see a central bank make an acquisition. Switzerland-based financial institution SEBA Bank CEO Guido Bühler said in a recent interview that if the right counterparties and necessary regulations are in place, asset pools at SEBA may invest in Bitcoin at the right time. Bühler portrayed a bullish picture for Bitcoin, saying a rally to $75,000 was possible. Will Bitcoin and most major altcoins remain range-bound in the short term? Let's study the charts of the top 10 cryptocurrencies to find out. Bitcoin turned down from the 20-day exponential moving average on January 13th, indicating that bears continue to sell on rallies. The bears will now attempt to pull the price back to the strong support at $39,600. Both moving averages are sloping down and the relative strength index is in negative territory, indicating that the path of least resistance is to the downside. If sellers sink and sustain the price below $39,600, the BTC/USDT pair could extend the decline to $30,000. However, the bulls are unlikely to give up easily at $39,600. A strong rebound off the current level or from $39,600 will suggest accumulation at lower level. The pair could then remain range-bound between $39,600 and $45,456 for a few days. A break and close above $45,456 will be the first indication that the correction may be over. The pair could then start its northward march toward $52,088. Ether's rebound off the support line of the descending channel on January 10th could not even reach the 20-day EMA, which suggests that demand dries up at higher level. The moving averages are sloping down and the RSI is below 40, suggesting that bears are in control. The sellers will now try to pull the price to the zone between the psychological level at $3,000 and the support line of the channel. A break and close below $2,652 will signal the start of the next leg of the downtrend. On the contrary, if the price turns up from the current level, the bulls will make one more attempt to push the ETH/USDT pair above the 20-day EMA. If they succeed, the pair could rise to the resistance line of the channel and later to the 50-day simple moving average. The bulls will have to push and sustain the price above this level to signal that the downtrend could be over. Binance Coin is facing strong resistance at the 20-day EMA, but a minor positive is that the bulls have not given up much ground. This suggests that traders are not rushing to the exit. If the price breaks above the 20-day EMA, the bulls will try to clear the overhead hurdle at the downtrend line. If they can pull it off, the BNB/USDT pair will signal a possible change in trend. The pair could then attempt a rally to $617. Conversely, if the price turns down from the 20-day EMA or the downtrend line, it will suggest that bears are selling on rallies. That could keep the pair stuck inside the channel for a few more days. Solana reached the 20-day EMA on January 13th, but the bulls could not clear this overhead hurdle. This suggests that the bears have not yet given up and are selling on rallies. The bears will now attempt to resume the downtrend by pulling the price below the support at $130. If they do that, the SOL/USDT pair could decline to the next important support at $116. The downsloping moving averages and the RSI in the negative territory indicate that the path of least resistance is to the downside. Contrary to this assumption, if the price rises above the 20-day EMA, the pair could rally to the resistance line of the channel. The bulls will have to push the pair above the channel to signal a possible change in trend. Cardano turned down from the 50-day SMA on January 13th, but the bulls did not allow the price to break below the $1.18 support. This suggests that bulls are buying on dip. The bulls will now attempt to push and sustain the price above the 50-day SMA. If they manage to do that, the ADA/USDT pair could rally to the resistance line of the descending channel. A break and close above the channel could indicate that the downtrend has ended. Alternatively, if the price turns down from the 50-day SMA, it will suggest that bears continue to sell on rallies. The sellers will then try to sink the pair below $1.18 and pull the price to the critical support at $1. Ripple turned down from the 20-day EMA on January 13th, but a minor positive is that bulls did not allow the price to dip below the support at 75 cents. This indicates accumulation at lower levels. If bulls drive the price above the moving averages, it will suggest that the bears may be losing their grip. The XRP/USDT pair could then rise to the overhead resistance at $1. If the price turns down from this level, the pair could remain range-bound between $1 and 75 cents for a few more days. A break and close above $1 will signal the start of an up move toward $1.41. Conversely, if the price turns down from the 20-day EMA, the bears will attempt to pull the pair below the 75 cents to 69 cents support zone and resume the downtrend to 60 cents. Terra's Luna token broke and closed above the resistance line of the channel on January 12. The bears tried to pull the price below the 20-day EMA on January 13, but failed. This indicates that bulls are defending the support aggressively. The buyers are currently attempting to push and sustain the price above the channel and the overhead resistance at $83.86. If they manage to do that, the Luna/USDT pair could rally to $93.81. The 20-day EMA is trying to turn up and the RSI has risen into the positive territory, indicating that buyers are attempting a comeback. This positive view will invalidate if the price turns down from the current level and breaks below the moving averages. That could pull the price down to the support line of the channel. Related, Bitcoin dips below $42,000 as new forecast says breakout most probable outcome for BTC price. Polkadot turned down from the 20-day EMA on January 13, but the positive sign is that the bulls did not give up much ground. This indicates that bulls are viewing the dips as a buying opportunity. The bulls are currently trying to sustain the price above the moving averages. If they do that, the DOTA/USDT pair could rise to the overhead resistance at $32.78. The flat 20-day EMA and the RSI near the midpoint suggest a balance between supply and demand. If the price turns down from $32.78, the pair may extend its stay inside the range for a few more days. The next trending move may start on a break and close above the overhead resistance at $32.78 or on a break below the support at $22.66. Avalanche turned down from the 20-day EMA on January 13, indicating that bears continue to sell on rallies. The price has dipped back to the uptrend line of the symmetrical triangle, which could act as a support. If the price rebounds off the current level, the buyers will again attempt to propel the price above the moving averages. If they succeed, the AVX/USDT pair could rally to the downtrend line of the triangle. A break and close above the triangle will suggest that the correction could be over. The pair may then rise to $128. Contrary to this assumption, if the price slips below the uptrend line of the channel, the pair may retest the critical level at $75.50. If this support cracks, the pair could start a decline toward $57 and then $50. Dogecoin broke and closed above the 20-day EMA on January 13, which was the first indication that the selling pressure may be reducing. That was followed by another sharp move today, which pushed the price above the stiff overhead resistance at 19 cents. However, the long wick on today's candlestick suggests that bears continue to sell at higher levels. If the price sustains below 19 cents, the Doge/USDT pair could drop to the moving averages and extend its range-bound action for a few more days. Conversely, if the price sustains above 19 cents, the bulls will make one more attempt to clear the overhead resistance zone at 22 cents to 24 cents. If they manage to do that, the pair could rally toward 30 cents. The views and opinions expressed here are solely those of the author and do not necessarily reflect the views of Cointelegraph. Every investment and trading move involves risk. You should conduct your own research when making a decision. Market data is provided by HitBTC Exchange.